All right, hello again, everybody. This is Mike with the Netpicks Inner Circle. In this week's options trade of the week, we're going to circle back to a target position that we put on a couple of weeks ago. So it's target symbol TGT. We sold an Iron Condor here a few weeks back on May 25th. We sold an Iron Condor with an outlook that target was going to stay in a sideways chop. We were not expecting a big directional move. So we came in and we sold an out of the money call spread and an out of the money put spread. I know the Iron Condor name, it sounds complex. It's really not. By selling the call spread and the put spread, it defines a range that we expect target to stay inside of. It's a way for us to generate some income if target just stays sideways instead of making a big move. So it's a great tool that we can have in our toolbox to stay active. You can't take this type of a trade with any other market out there. You can't do it with futures, can't do it with Forex, but you can do it with the options. That's a big selling point for me personally. I'd like to have that flexibility as a trader. Now, the problem with the target trade from a couple weeks ago, we were expecting to stay inside of a range, but it's done anything but. We've actually seen a big move to the upside, along with the rest of the market, to be fair. But now the trade's in trouble. So I wanted to use this as an example here today to walk you through what do we do when a trade goes bad? What if we are completely dead wrong, even though we have a high probability of success on many of these trades? What happens when they do go wrong? Because we know it's possible. So I want to walk you through how you can make adjustments to trades. How do you potentially try to battle back from a losing trade without making it exponentially worse? So let's walk you through this example. On target, the whole idea of this trade, when we looked at it a couple weeks ago, is we had seen target attempt to make some moves to the upside, but every time it does, it starts to settle back inside of this range between 70 and 72. So my anticipation was target was going to stay somewhat sideways and choppy going forward. Over the past week, you can see we have broken out to the upside in a pretty big way. So we were dead wrong on our directional outlook, and now we have to take some action on this trade. So I'm going to walk you through what I will do here going into next week. So let's circle over to the trade page, and let's talk about the original trade that we put on. You'll see it down here towards the bottom of my screen. I sold the 73.5, 74.5 call spread, and I sold the 70.69 put spread. I collected 50 cents to put this trade on. So it was right around a risk one to make one type of scenario. I needed target to stay inside of my short strike. So it needed to stay inside of 73.5 and 70. Those are my short call and put strikes. The problem is now you can see targets all the way up over 78. It's made a pretty big move to the upside. So now the short put spread that I sold, it's basically given me all that profit. It's essentially trading worthless. So that did exactly what we wanted it to do. The problem on this trade is the short call spread. That 73.5 call that we sold is now in the money. If it stays in the money next week, we're going to face some assignment risk. So we are going to have to close it out here at some point next week if we don't get a big move to the downside. Could target really sell off next week? It certainly could. The market's very overbought here. There's a lot of news out next week. So we're already facing essentially a full loss on this trade. It can't get any worse than what it is already. So it doesn't make sense to close out of the entire position right now because we still have 7 days left. Crazier things have happened. If the market sells off next week with some of the news that's out over the next week, we could start to battle back. I'm not saying it's going to hit a full winner, but if we can start to limit the damage a little bit, it makes sense to hold this trade a little bit longer. So on the original Iron Condor, I am going to let the put spread expire worthless. Okay, I don't need to do anything with that. And then next week, if that short call, the 73.5 call, if that stays in the money, so if price action stays above 73.5, we will close out of the call spread next week before expiration. That's how we're going to manage the original trade. But now I'm going to look to put on a new trade. I'm not just going to walk away from target and say, well, that trade didn't work out. I don't want to trade target anymore, because there could be an opportunity here to battle back over the next few weeks. So now we have to ask ourselves, has our opinion changed? Has our outlook changed on target? Well, it has, because we went from a neutral outlook to now the market is very overbought. We've seen a nice move to the upside. Now I'm expecting target to pull back over the next few weeks. So instead of coming in and selling another Iron Condor, I'm going to take a look at selling an outright call spread. So I'm going to go from a neutral trade to more of a bearish outlook on the trade. So let's go in and take a look. The June options, we did the original Iron Condor in the June monthlies. They only have 7 days left. So I really don't want to do anything else in the June monthlies. There's just not enough time. With only 7 days left, there's really not enough premium there to make it worth our while. So I'm going to go out another week. I'm going to go to the June 22 weekly options that have 14 days left to expiration. And I'm going to take a look at selling the 79 call. I'm going to right click on that 79 call. I'm going to go to sell, and I'm going to select vertical. And I'm going to take a look at selling the 79.80 call spread. So I'm selling the 79 call, and I'm buying the 80 call to make it a risk-defined trade. I can collect 36 cents to put this trade on, or $36 per spread. So it leaves me with a scenario where I'm collecting $36. That's the most I can make on the trade. My maximum loss is $64 per spread. So I'm risking another $64 to try to battle back a little bit on target. So it's right around a risk 2 to make 1, actually slightly better than that, which I'm completely comfortable with. So our break-even point would be at 79.36. It's taking my short call strike, that 79 call, we're adding on the 36 cents, and that gives me my break-even point on the upside. As long as target stays below that level, I make money. So if it moves slightly higher, it can move about $1 higher on me, I'm still okay. It can move sideways, or it can make any type of a move to the downside. As long as we stay below 79.36, I get to make money on the trade. I also make money from time decay adding up and from volatility decreasing. So now I've got 5 different ways of making money on the trade. Now let's just say that target does indeed pull back over the next week or two. Okay, if it happens next week, I could potentially take a partial loss on my Iron Condor from a few weeks ago, that first trade that I talked about. And now I have another 36 cents of profit potential on this new short call spread. Am I taking some additional risk here? Yeah, I'm taking another $64 of risk. But it gives me a chance to start to battle back. Okay, so the reason I wanted to point this out, so many retail traders, they take a loss, they get frustrated, they get angry, and then they ignore that trade type, or they ignore that market for a while before they come back to it. In this case, it's just a losing trade for me. I kept my risk small. Okay, as you guys know that have been watching the trades of the week here over the past few months, we've had a very high winning percentage. This is one of the few losing trades that we've had. So we know the results are there. The market just happened to move against us here. So I'm going to use this as an opportunity to put on another trade on target, see if I can battle back. If the short call spread also wins, I may be able to get back close to break even, or maybe leave me with a smaller loss. That's exactly what I'm trying to do. So I'm not going to get intimidated by the loss. I'm just going to look at it as, hey, the trade went against us. We were flat wrong. We were dead wrong, and the market made a big move higher. So now I'm trying to react to that. I'm trying to battle back as quickly as possible, and this is one way that we can do it. So again, all we need is target to stay below 79.36, and I get to make money on this position. And again, it's a 14-day trade, so it'll move pretty quickly for us. If the market does decide to pull back next week, we could certainly look to manage the trade accordingly. So that's our trade of the week on target. If you have any questions on this new setup, or maybe the earlier Iron Condor, feel free to leave a comment here in the blog. I'll get back with it right away, or feel free to email me directly. That's fine too. My email is mike@netpicks.com. So going into next week, overall market still very overbought. We're definitely due for a pullback, but we have a lot of news out next week, so anything can happen. I'm really looking forward to trading next week. Before we wrap up, let's just really quickly take a look at one of our open positions, the other open position that we have with our trades of the week. And let's take a look at GLD. The position that we had on, we sold the 122-121 put spread on gold in the June 15th option. So let me go ahead and pop this up here a second. We put this trade on about 3 weeks ago now, and we collected on this trade. We collected 35 cents. It's now trading for 16 cents. So you could take this trade off right now and have about a 50% profit on the trade. I wouldn't have a problem with that. But now you need to ask yourself, okay, has your opinion changed? Has your outlook changed for gold? For me, it has not. I still think gold could potentially be heading higher here in the near future. So I'm going to hold this trade a little bit longer. Okay, we still have 7 days on this trade. All we need GLD to do is stay above 122. So we've got about $1 that this thing can move against us. It could head lower by $1 next week, and I'm still okay. So I'm going to hold this trade. I'm going to target around 75% of my maximum profit potential. So if I can close out of this thing for around 8 cents, that's what I'm looking to do here next week. So nice trade. So a nice situation here where, you know, the gold trade's working. That's going to help us battle back from the target loser on the Iron Condor. Right, so again, any questions on the GLD trade or the target positions, certainly let me know and I'll be in touch right away. So I'm going to wrap this video up here. I'll be back with you guys next week. We'll take a look at our open positions and then also take a look at a new trade of the week at that point. So enjoy your weekend, everybody. We'll talk to you here next week.